Ladies and gentlemen, good day and welcome to Jyoti CNC Automation Q1 FY26 earnings conference call hosted by Equirus Securities Private Limited. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements do not guarantee the future performance of the company and may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Patel from Equirus Securities. Thank you, and over to you, sir.
Thank you. Good evening, everyone. On behalf of Equirus Securities, I welcome you all to the first quarter FY26 earnings call of Jyoti CNC Automation. We are pleased to have with us Mr. Parakram Singh Jadeja, Chairman and Managing Director of the company. We will have opening remarks from Jadeja sir, followed by a Q&A session. Thank you, and over to you, sir.
Thank you, Harshit. Good evening, everyone, and a very welcome to our first quarter FY26 earnings conference call. Along with me, I have a senior management team and SGA, our investor relation advisors. Results and presentation have been uploaded on the stock exchange. I hope everyone has had a chance to go through the same. I will begin my remarks with a brief update on economy, followed by a key operational and financial highlights for first quarter FY26. The global economy is going through a tough time. Many developed countries are still dealing with high inflation and slow growth. There is also uncertainty due to a new tariff and trade-related issues. But India continues to stand out. Our economy is expected to grow at 6.4% in both FY 2025 and 2026, which makes us one of the fastest growing economies in the world. One positive sign is the manufacturing PMI, which measures how fast the manufacturing sector is growing. In July 2025, it stood at 59.1. Anything above 50 means the sector is expanding, and India has been consistently above that mark. This shows that India is becoming a strong base and a manufacturing hub for global economies. While India's overall outlook is strong, we need to keep a close eye on geopolitical situation and ongoing tariff-related situation. Since we have a manufacturing presence outside of India, we will be a better position to navigate the situation. However, it is still evolving and needs a close monitoring. Now let me talk about Jyoti CNC. We are one of the top 10 CNC machine manufacturers in the world, with manufacturing facilities in Rajkot, in France. With an annual capacity for manufacturing of over 6,000 machines, with over decades and experience and R&D, we have been able to develop world-class machine manufacturing capabilities, which is at par with the global standards. We at Jyoti are proud to play a key role in supporting India's vision of becoming a global manufacturing hub. With our strong manufacturing capabilities and world-class infrastructure, we are well equipped to meet the growing needs of the industry. Our machines are used across a wide range of sectors, including aerospace, defense, automotive, electronics, general engineering, and many more. showcasing our ability to cater to diversified applications. Our partnership with Huron, a global leader in high-precision machining, has further strengthened our technological edge and helped us expand our footprint across international markets. We continue to see a steady demand for our product both in India and globally, driven by a focus on quality, innovation, and timely delivery. Over the period, we have been able to penetrate into wide industries, including high growth industries such as aerospace, defense, and EMS. We have been able to acquire customers with high repute and have been able to add a wallet share among the marquee domestic and global clients. We remain positive on our end user industry growth, and with our expertise in machine manufacturing and strong relationship across customers, we are optimistic of growing our revenues and profits going forward. As we look forward, we remain committed to investing in a new technologies, building a strong customer relationship and supporting the growth of India's manufacturing sector. Speaking of a few specific highlights which I want to share. In July 2025, our board approved the purchase of 20 acres of land and Tumkuru Machine Tool Park in Karnataka. This part of our long-term growth plan. The idea is to set up support centers, technological center, and a warehouse closer to our customers, especially those in electronic manufacturing services called as the EMS sector, which is mainly based in southern India. The strategy is to move closer to the customer cluster and diversify our manufacturing presence. Further opportunity in the EMS segment are promising. We are in active talks with the multiple customers, and the initial assessment looks very promising. We are still in early evolution stage and will be able to share more insights once we firm up some decisions. As part of EMS related PLI, a government has acknowledged that the companies in the entire supply chain of manufacturing will be eligible for PLI. We are in active discussion. Nothing has been finalized yet, but we will definitely submit our proposal and await a positive responses there. We are also seeing increased inquiries from our European customers, especially from the defense and the allied sector. We are hopeful that this can in turn convert into a large orders going forward. Our current capacity utilization is close to 75%. With current order pipeline and order inquiries, we will need additional capacities to cater to this high demand scenario. Our plan to increase capacities to 10,000 machines per year is in progress well and will be completed by September 2026. Lastly, I would like to highlight that continue to follow a careful and disciplined approach when it comes to investing our future growth. Currently, we are planning to fund all the related organic capex by a mix of internal accruals and debt, and we do not envisage any need of external capital. We remain committed to maintaining a healthy financial position while making the right investment to support our long-term strategy. Coming to the financial and operational performance for a first quarter of 26, we reported a very strong consolidated revenue growth of a 13.4%. Our consolidated revenues stood at rupees 410 crores in a first quarter FY26 compared to rupees 361 crores in a first quarter FY25. Historically, the first quarter tends to be a seasonally a soft period for our industry. as order activity is usually lower during this time. Our business typically sees a strong second half of the year, and we expect this trend to continue this year as well. Revenue split across the industries is 30% contribution from aerospace and defense, 36% come from auto and auto components, 26% contribution from general engineering, and 8% from other sectors. Our first quarter FY26 order intake stood at rupees 451 crores, which consists of 33% of aerospace and defense, 31% of auto and auto components, 29% of general engineering, and 7% from the others. Our current order book remain healthy and well diversified, standing at rupees 4,412 crores, reflecting a steady growth and customer trust. Industry-wise order book breakup stands at 39% from the aerospace and defense, 19% from general engineering, 17% from auto and auto components, 16% from EMS, 4% from dies, molds, and rest coming from the other segment there. Our gross margin for first quarter FY26 stood at 55.9% as compared to 53.2% on FY25, a growth of 270 basis point over there. EBITDA for first quarter FY26 stood at rupees 100.2 crores, a growth of 6.5%. Our EBITDA margin stood at 24.4% this quarter, as against the 26% in a first quarter FY25. EBITDA was primarily impacted on account of increase in our employee cost, and the same has been balanced out over the year with increase in revenue and operating leverage playing out over here. A profit after tax for first quarter FY26 stood at rupees 71.2 crores as compared to 50.9 crores in first quarter FY25, a growth of 40.2%. Our PAT margins for the quarter stood at 17.4% as compared to 14% in the first quarter FY25, a growth of 340 basis points on a year-on-year basis. To conclude, we have made a strong start of FY26, backed by solid revenue growth, a healthy order book, and continued demand across the key sectors. Our strong manufacturing basis, focus on technology through our partnership with Huron, and commitment to supporting India's manufacturing vision, position as well as for the future. We remain financially disciplined with balanced approach to investment and are confident of delivering a sustained growth in the upcoming quarters. We may now open the floor for question and answers.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Manish Oswal from Nirmal Bang Securities. Please go ahead.
Yes, sir. Thank you for the opportunity. And I have a question on the current quarterly performance compared to the earlier quarter trend. So if I look at the seasonal softness of the quarterly revenue in last year, this quarter, the decline compared to March quarter is slightly higher compared to quarter one of last year. So can you explain anything which is impacted the more moderation of growth in the revenue compared to the seasonal pattern?
So basically, Manish ji, see the first quarter is a little bit always softer after the stretch of a last quarter. And even our reflections also, let's say once every all our customers are closing their financials and audit numbers, and always they are reaching to again to budget approvals and getting the funds and everything. So first quarter always in industries are like that, okay. And this is a seasonally what we are seeing, and the things are here. There is no other than any significant change we have been addressed over here.
Secondly, sir, end user industry where you indicated the order book in terms of end user industry. So those industries are growing much faster than the current quarter growth rate. So in terms of yearly performance, where the revenue growth we can anticipate on a yearly basis compared to F25, given the very strong order book position we have?
So particularly, I'll tell you this aerospace and defense, this area, okay. There we are looking a very strong wind still there, okay. And this area, we have a very, let's say, very large machines and everything, that the value addition also is much better there. And we are looking furthermore in a coming next 2 to 3 years, this scenario is going to be happen there.
Lastly, sir, recently filed filing where you mentioned that the board has approved purchase of 20-acre land in Karnataka. So what kind of capex, what size of capex we are investors over there?
So we have not make any final printout over there, because just is beginning. So the idea being that we would like to develop a very supportive things to our customers there basically. So we will do our tech centers, we will do our demo centers, and we'll do all the supporting the qualifications and all to our customers there. Okay, so we are going near to the customers for a servicing, support, spare parts, and all like that. So we are not looking at large anything, a capex kind of a things are like that. It's just a kind of a sales and service offices and the support systems to be developed over there in an initial stage. And all our customers was demanding, especially on all this electronic manufacturing customers base our southern area. So there were always the push was that you should come over near to us over here. So we are going there basically. In terms of a capex, I'm not able to tell you anything today because it's not in plan. Has not been made out of that. We will see in a couple of quarter and we'll update you on that basically.
All right, sir. I call back in the queue for further question. Thank you.
Yeah.
Thank you. The next question comes from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Yes, thank you so much for taking my question. So my first question is on the other expenses. They have grown reasonably this quarter. So I was just wondering if this is a new level, the other expenses that we can expect. Even Q4 other expenses were a little bit on the higher side. So and what are the drivers for this level of other expenses?
So basically in other expenses generally, see the way we have increased our manufacturing capacity, okay? And let's say this quarter, whatever the parts and everything we are manufacturing, we are a long manufacturing cycles are there. So in a coming quarter, these are all the components and everything is going to be consumed over there. So this is all our manufacturing activities has been increased. That's why this kind of expenses has been increased there.
And so can we expect a similar level?
And then that will be, and that will be, then it will be balanced, it will be sustained into balance there, and it will be equally divided there basically.
And also the other income this quarter is also quite high. So what is the reason for that?
So basically this is a forex gain has came over here in terms of debtors and receivables there basically.
How much could you be able to quantify the forex gain?
So it's a 16 crore rupees there.
All right. And on
we are in a eurozone, okay, and
Right.
euro has been appreciated very largely in the last couple of months. So that has been converted over here basically.
Mhm. Uh, Could you please call out, what is your revenues and PAT for Huron for Q1? And also that, we've spoken multiple times about how we want to shift most of our high-end manufacturing to Huron so that, to gain a better market share in Europe. So what is the progress on that front?
So basically, today, whatever this order intakes and everything, what we are seeing in aerospace and defense, this is the total area. We have a client base are from the Huron side only. Okay. So in terms of in a Huron, we have done around 70 crores as in revenue this year, compared to the last year was a 67 crore there. Okay. And at PET level is close to around 2 crores there basically. There we have, let's say our new facilities are coming in operations from this month end. Okay. They have handed over and final, everything is going on. So here, already there also we have increased the manpower there a lot because the new facilities are going to start now. So almost in terms of expenses, is 8 crore rupees has been add on because the people we need to be trained and to be ready with that. Okay. So these are the things. Otherwise, there also we have a sustainable margins and all are very well there now.
So given that the new the factory is going to come up over there, new setup, you're hiring people there. What is the kind of revenue and PAT that we can expect from Huron in say by the end of FY26?
So in a Huron, let's say until today our capacity has been fully utilized. Okay. So this year and still it is let's say 4 months. It's going to be is almost gone. Okay. From the 5th month is coming. It means half year is available with us, and whatever the machines we are making there, it's a long lead manufacturing machine. So we see the revenue growth on a last quarter, even for a next year first quarter, only to be a large growth we are able to see that things. Okay.
All right. Yes. Thank you so much for answering my question.
Thank you. The next question comes from the line of Adil from ICICI Prudential Life. Please go ahead.
Hi. Good evening, sir. Thank you for taking my question. I have two questions. One is, what percentage of our total sale is exports to US? And the second one is that, do you see any impact of this global uncertainty on EMS orders that we can get in India? Those are my two questions.
So the first of all, we in this today's revenue, we are not having any export sales to US there. Okay. We are mainly on a Eurozone there. So US, today we are not directly as an affected any tariff time because we are just going and establishing our more sales networks in coming quarters there basically. Okay. And your second questions about EMS. See all the situation is lucid. Today all our customers are basically going on a very hefty growth levels and all, and manufacturing is going to be in the coming times is all electronic manufacturing is going to grow furthermore. We are not seeing any adverse effect on the investment cycles, and we are not feeling anything over that to be stopped in India today over here. That. In fact, there are many more customers are coming in India that I have covered in my initial remarks. So we are seeing the much more opportunities on this sector because this is just a beginning over here there.
Understood, sir. Thank you so much for taking my question, and all the best.
Thank you.
Thank you. The next question comes from the line of Ishita Lodha from Swan Investments. Please go ahead. Yes, Ms. Ishita, your line has been unmuted. You can go ahead.
Can you am I audible?
Sorry to interrupt. You're not audible. Your voice is breaking.
Okay. Am I audible now?
No, we are unable to hear you.
Hello. Hello.
Yes.
Am I audible? Yeah.
Yes,
Yes.
you are
So
audible.
for the land acquisition in Karnataka, how much have we spent only for the land?
Is close to a 20 crore rupees. It's a government land. The government
Okay.
has allotted this land, and it's in a
Okay.
specific machine tool park. Okay.
Okay.
The Indian government has made this special park, and it's
Hmm.
been developed very specific machine tool activities over there basically. So it's in park, and it's a 20 crore rupees there.
Okay.
Yeah.
Yeah. Thank you.
Thank you. The next question comes from the line of Aniket Jain from Yes Securities. Please go ahead.
Sir, I wanted to check that you have quite a good margin increment this year, one of the best over the last few quarters. So do you expect to maintain? I'm talking about the gross margin. So do you think we'll be able to maintain those gross margins? And this time it did not flow through EBITDA because of higher employee and other costs, other expenses. So once that normalizes, can we see margins increasing to probably 27, 28%? That is my question number one.
Okay.
And
So
question two would
basically,
be,
in terms of a margin,
yeah.
so we are not seeing any pressures because the way we know what is our order book today, we are executing from them. So we know what is the price as the machine has been sold, and we know the today's material cost and all. Okay. So today we are not seeing anything on any cost pressures there. I think we will be maintain margin growth very well in this year also.
Uh, Sure, sir. And the second one is, would you be able to provide any guidance, revenue guidance for this year, any growth guidance or any absolute number that you are targeting for this year?
So I'll generally have maintained the momentum. I never made a guidance, but I'll tell you one thing: we will maintain the growth trajectory nicely, and momentum will be maintained there.
Okay.
The way our execution will improve. See, the challenge is part what we are saying is not in business because we are on the huge order book and still the pipes are coming bigger and bigger. Okay.
Yeah.
Challenge is still is in part of execution because the people, the way we are increasing the team size, people and all, and this is not an just commercial manufacturing activities over here. It's a very high precision. So skill base has to be impart first, and that's the always in my call I have maintaining since last 4 calls that we are working more and more onto that, and based on that our execution will improve and we will include more and more growth to be there. In fact, all our order book we have committed to our customers very on a short times and all. Okay. So we also are looking to be a very growth trajectories in coming quarters to be there.
Got it, sir. Just last one, if I can squeeze in. So due to this execution risk or the execution issues that you're currently going through, are you saying no to any orders, or are you deferring the orders to probably after 2 years or after 2.5 years? So that would be my last
See,
question.
basically, we are not doing this kind of a thing, but yes, the customers are not been pleased. Now, if I commit the delivery more than 2 years, no one's are ready to wait for up to 2 years, sir, basically. Okay. So we are also into, so right now, whatever the things we are expanding, we are running behind all our, let's say the capex, what we are doing every day, we are chasing them and increasing the people and the skill up of the people. Our center of excellence are working fully, and we are focusing on more and more to increase the team size and to better execution over there basically.
Understood, sir. Thank you so much for the answers.
Thank you. The next question comes from the line of Mayank Chaturvedi from HSBC Mutual Fund. Please go ahead.
Yeah. Hi, good evening, sir.
Hi, Mayank.
So, just one, firstly, on the board meeting approval that has come in to acquire entities in USA and China, can you please elaborate more on this? Have you identified any entities, I mean, to which part of your production will it cater to, etc.?
Thank you, Mike. You have read the board notes, so okay.
Yeah.
Okay. Yeah, Mike. We took a decision to go to China because the China is the world's largest market today. Okay. And we are so cost competitive and compete to the global market over there. And in China, Huron has a very long customer base. Basically, all our government customers are there. Okay. And we are now aggressively looking to expanding the geography China there. So we took a decision in this board. And in the first phase, we would like to go and sales and services network our own peoples and all. And the second, there our existing client as well as this new area, there we are entering in electronic manufacturing. The largest consumers are sitting over there basically. Okay. So it's a great opportunity and all the customers also wanted to us to go there. So we are going there.
Is there a customer overlap between your EMS customers in India and in China?
Yeah. So a similar customer base also there, so we are going there.
Okay. Great, sir. Yeah. Great to hear that. So second, on your existing order book for EMS, when do you expect that to get liquidated? And when do you expect?
Yeah, we are just now, all the customers plant, okay, their supply chains are been developing and many more plant under construction there, okay. So we have not been received the schedule when it is to be happen, but any moment we are looking and seeing their construction activities and all. We hopefully in the third and fourth quarter is going to be a good liftings are going to be happen for there.
Okay, sir. And just last, bookkeeping, like you give every quarter, can you give a breakup of the machinery sold in entry level, mid level, and high-end level machines?
Yes. So this quarter we have sold 1,117 machines. Okay. And entry level product is 994 machines. Okay. An average of 20.52 lakhs. Okay. And mid level is around 104 machines at 71 lakhs. And the high-end machine is 19 machines at an average value of 5.6 crores.
Okay. Okay, sir. Great. Thank you for answering my
question. So the last year, first quarter, we sold 788 machines. And in terms of numbers, this quarter we sold 1,117 machines. Okay. So this is how total scenarios are here.
And I see the average price realization for high-end machine has also gone up significantly, I think.
Yes. Basically, these are the long lead manufacturing machine. So some of the machine the last year first quarter has gone up more. This quarter 2-3 machines let's say is making impact of 50-60 crore rupees of a revenue. Okay.
Okay.
So that will come in a coming quarter then.
Okay, sir. Great, sir. Great. Thank you for answering my questions. All the best.
Thank you. The next question comes from the line of Pratik Dharamshri from Union Mutual Fund. Please go ahead.
Congratulations, Jadeja ji, for a good set of numbers. Couple of questions
from
my side.
Yeah.
Couple of questions.
Thank you, Pratik bhai. Yeah.
One on margins. Structurally, how should one see your margins evolving over, say, next 2 to 3 years? Considering you mentioned aerospace and defense will take more share of business going ahead, which mainly will be driven by Huron. So how should one structurally look at the margins? Will it hold around this level, or there is scope for improvement over next 2 to 3 years time frame?
Yeah. So again, in my answer I given you in past, in a differently asked this question in first time. Let's say the people, let's say we have a order book is close to, if you today's run rate, if we see that, is a 2 years. Okay. So is a margin is clearly visible there. We are not going to down below this basically.
Understood.
Yeah.
And the second question I missed out, you mentioned something you would be applying for some PLI scheme. I missed out on that. What was it regarding?
Yeah. So great, Pratik. Thank you for that. See, now the government has come out with the new the scheme that all the supply chain on a PLI has been eligible. Okay, and Jyoti has also been identified and let's say approved eligible. Let's say we are also eligible to get this PLI scheme, and whatever the capex we are doing, okay. And then some part of these capex, we'll see that how they are been approving and all. So there we have one of the support systems are in a capex they are giving us a 25% of a subsidy, okay, from the central government. And similarly, if central government gives a X, similar amount is given by the Gujarat government there, okay. So it's close to 25% other there. And additionally, whatever the machines and this kind of a thing, so that we are just discussing with the government there, and we not been clarified that how we can able to get the productive, let's say, the linkage incentive there. Right now the scheme is for the 6% on the sales, but how we are going to be eligible and all, there is unclear things are there. That's why not I've given the numbers to you there. But yes, we are eligible and we have approached to the government. We will very soon will come to know how much we are able to get this support systems over here.
Got it. Thanks a lot and all the best.
Thank you.
Thank you. The next question comes from the line of Venkat from Mirabilis Investment Trust. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Vipin Goel this side from Mirabilis. Hi.
Yeah. Hi.
Sir, I just one question. Given that we have these capacity constraints and we plan to increase the capacity, how do you usually go about planning of this capacity? Like in terms of if you were to prioritize this capacity between the sectors EMS, auto, general engineering, how does that decision basically works out? Is it based on the margin profile of that order or the growth visibility of that sector or the customer, the bargaining power or let's say the customer concentration within that sector? So how do you go about prioritizing these three sectors?
Yeah. First of all, let's say your first question about the planning. Okay. So generally, we see there is a model mix of a business there. Okay. See, the size of the machines are been different in every different segments. In an entry level product, the machines also goes to a size of the machines also goes to aerospace. So there is no much a direct connectivity on a capacity planning on a sector wise there. It's basically a frame size of the machines basically. What kind of a machines we are able to build? What is the frame size are available? What is the biggest part we are able to do it? And that's the all our planning directions and lead are based on that basically. All the capacity is based on a smaller machine, medium sized machine or a large machines basically. And all these three categories are being distributed over all the manufacturing sectors to be there. Okay. So that's your first question answer to be there. Okay. What was the second? Can you repeat that so I can give you the more better?
Yeah, I mean that's pretty much clear that it's largely differentiate between small, mid, and large categories of the size of machine.
Yeah, is an envelope of the machine basically there. Yeah.
Okay. And given the current situation, which sectors then within the three, let's say, you see would be growing faster than the others, given the capacity constraint again? So the reason again I had to ask is that how much flexible are you in terms of the delivery timelines of these products within sectors? So which sector would be the most, let's say, flexible if you were to, let's say, delay or postpone that delivery timeline?
Today, I have only this by large machines, and particularly large machines today. What the order book we have received and going to receive that, and getting more and more inquiry in from the Europe now today is on a large machines. And the large machines, let's say in terms of today's our plant capacity, it's not an fungible that all large parts cannot be produced in a smaller machine there on that area. Okay. So small machines I can produce in a large assembly area, but large machines I cannot produce on a smaller machine area. So you can consider there is a large area that we are feeling to be a constraint to be there basically.
Okay.
Rest are fungible there. Yeah.
Okay. Then in that case, how to think about the growth of for the, let's say, next 2 years of small versus medium versus large?
So we are based on this model mix and the seeing the scenario, our capacity we are expanding accordingly there basically. Okay. Already is planned out and we are increasing similar level to be there.
Right, sir. But which sector of these three, which category of these three would be, like, let's say, the fastest growth? And
so let's say today, what is our 10,000 machine capacity we are expanding? Okay,
right.
Even the highest growing area we are seeing in coming next 2 to 3 years is going to be electronic manufacturing. There, and even that is a more comfortable for us because this all EMS and other sectors are very fungible, so we can do with the auto component, general engineering, everywhere the same capacity will be utilized there. So full these expansions are going to come on a entry and mid-level machines there basically.
Okay, so this 10,000 capacity would largely be split between medium and small.
Yeah.
Okay.
And that is the fastest growing area also there.
Great, sir. Again, like roughly 50-50 broadly? Or let's say 60-40, 60 between small and 40 between medium?
So this additional 10,000 machine is going to be dedicated to the entry and mid-level. So before that, let's say while we have made this 6,000 machine capacity, we have almost a large machine capacity we already increased there. And in Huron also, whatever the capacity we are expanding, it is basically for a large machine only there.
Got it.
Yeah.
Sure. Thank you. That's it.
Thank you. The next question comes from the line of Sandeep Jain from Baroda PNB Paribas Mutual Fund. Please go ahead. So your line has been unmuted. Please go ahead with the question. As there is no response from this line, we will move towards the next question. The next question comes from the line of Ashish Kumar from Ampersand Capital Investment Advisors. Please go ahead.
Yeah, thanks for the opportunity. Any kind of color you can give on, like you have said that H2 will be significant better than Q1, but Q2, can we see a higher revenue growth compared to what we have seen in Q1? And second question is on EMS. In past few calls, we have mentioned that the supplies will start from, let's say, later part of this year. What's the update on that? And when we start supplying EMS machines, like what kind of impact it will have on our margins? Yeah, those are my questions.
So basically, let's say always first half and second half is a 40-60 kind of a things like that. Okay. And Q1 to always, Q2 always to be better. Q3 is much better and 4 is a greater than. That is the way we are going ahead there. So that's I can say there's only color. More color I'm not able to tell you there. Okay. Regarding this, let's say in EMS. So people have feared that, let's say EMS as a margin is, gross margin is less as a competitive area. It is not like that. For overall our entry-level product and this combination of this is all entry-level product and EMS on a similar level only there. So it is not going to be impacted anything while EMS execution is going to be increased there. It's on a similar set of margins to be there.
Thank you. And like our EMS supplies will start from second half, that's we are sticking to that, or is there any delay in that?
So we are also looking to be eagerly to supply them. So the facility will be ready there. Hopefully we will start from a third quarter. We hope if someone will put up early so we can deliver them faster there.
Okay. Thanks. That's all from my side.
Thank you. The next question comes from the line of Sandeep Jain from Baroda PNB Paribas Mutual Fund. Please go ahead.
Yeah, hi sir. Sorry, I got disconnected last time. Just one question. Hi sir. So just one question. I joined late, so if you can clarify that. In Huron, our capacity expansion plan got delayed in Q4 and all, and it was supposed to get started probably by Q2, if I remember it correctly. So is it online or there is further delay? How we can look at it?
Sandeep ji, it's online. Just 3 days back, I come back from there. The facility has been finally handed over to us as a final. Now our equipment installations and everything is going on, and from September onwards, we are starting assemblies over there.
Okay, so
we already move into there in the plant, and all the activities have been started there now.
Okay,
so there is no delay now.
And revenue booking and all those things will start from Q2 or Q3 kind of?
No, because that that manufacturing cycle is longer there.
Okay.
If I start any machine assembly, it is also going to be a longer period there, basically.
Got it.
Yeah.
So from September, if you will start assembly and all, okay, so probably
we will see the in the last quarter some colors, but the better is from the you know that now more in detail.
Yes, and all the facility in Huron is high ticket size machinery, right?
Yes, all are high ticket size machinery.
High ticket size machinery. Fine.
Yeah.
That's it. That's my
question. Thank you.
Thank you. Yeah.
Thank you. The next question comes from the line of Jayesh Shah from OHM Portfolio Equity Research. Please go ahead.
Thanks for the opportunity. Sir, I had a question on your overall growth rate. Do I understand correctly that you have a capacity utilization constraint till the new capacities come in? So your growth is basically back-ended basically from say second half of FY26 or actually FY27. Because if I annualize your current first quarter growth rate, even at the basis of 40-60 for first half and second half, your FY26 revenues will be around close to 2,000 crores, which only gives you 10-15% growth rate at the top line level for the current year.
You are putting me in a difficult situation because I not any time to give any forward to you.
No,
but you are slightly. See the first quarter. I'll tell you one thing. No. I'll tell you one thing. I'll tell you one thing. A little bit your calculation is little bit you have to correct. See already the first quarter growth has been close to 15%.
Yeah,
okay, close to 15%. Okay, and always I said there is a second, third, and all will be having a good. And today our capacity is close to 6,000 machines. Okay,
right.
And right now, let's say we have based on this quarter is a 1,100 machines we've done. So close to this year we are expecting to almost 90% utilization, and 90% utilization you can now make a maths and all, so you will reach to a nice number there. Okay.
Okay. And do you have different margins in these segments like EMS, aero, and defense, or the margins more or less similar?
No, basically,
gross margin.
In terms of we measures on a gross margin. So in the past also I have been mentioned many a time, maybe you have not been aware. So I'll let you know that we have a entry-level product, what we call as an entry-level product. Okay. There we have a gross margin is close to a 35 to 40% in between there.
Okay.
Then we have a mid-range machine. There we have around 40 to 45 to 47% of the gross margin there. And then we have the high-end machines. Okay, there we have a close to a 55, 57% over there. Okay.
Right. Yeah. And sir, how's the working capital cycle now?
So now, let's say last year we have reached to close to 175 days, and this year we are slightly going to improve from that now.
Okay.
So whatever in my early call, so we said that this year and we are on the way, and nicely we are on the way. We are going to touch in between 150 to 160 days over there.
I see.
Yeah.
Got it, sir. Thank you very much. Best of luck. Thanks.
Thank you.
Thank you. The next question comes from the line of Kamlesh Bagmar from Lotus Asset Managers. Please go ahead.
Yeah, thanks for the opportunity, sir. So if I see like last year, like we had a EBITDA per machine of roughly around 12 lakh rupees. And if I see this quarter, like we have done on the gross margin 20.5 odd lakh rupees, which is down 16% year over year. So can it be the case that in order to push our volumes, we may take a hit on the margins, and the margins could be much lower, which we were expecting around 12 odd lakh rupees? So just a query on that.
Kamlesh bhai, you are the only person is able to reach out to per machine like that. Okay. So basically, margin, I said that as an combined EBITDA level margin, we are going to have to close to let's say this year in first quarter itself is 24.4, and it's come down 1.5%, and that's only due to the people increase in the last 1 year. Okay, so we are comparing to last year first quarter to this quarter. Okay, and almost 15 crore rupees of additional the manpower cost we have incurred from last year first quarter to this year first quarter. This is the only difference has been come over here, and that's how we are able to maintain number of machines. Model mix may change. Okay, sometimes we make larger machines, it's a less volume. Sometimes we make more machines with a less value, but number of machines to be more. We are on a track to maintain on a EBITDA level, and we will be on that basically.
So I was just referring to the gross margin. So it's down 16% year over year in rupee terms. So last year it was 24.5 lakh, and it is now 20.5 lakh.
You are calculating per machines basically.
Yeah,
okay.
Per machine.
Yeah. So basically the per machines is not an parameters, because this quarter the number of machines we made more. That's why the per machine average is 36.72. Okay. So end of the year we will be having a let's say if I reach to a 50 lakhs average, so automatically it will be set right over there. Okay.
But do we expect, like say last year it was 44.6 lakh. So do we expect?
No, it's some quarter. Let's say in this quarter, this what I told you, around 2-3 machine has been coming on a next quarter more. The value of the machine is very high, so you will see the next quarter maybe or third quarter maybe more jump. Okay.
And sir, lastly, you had like say you are not giving us a guidance, and you have maintained that for the last many of the concalls. But as you are saying that you will maintain the momentum, and over the last 3 years we have grown 30 to 35% CAGR. So what do we see? Like say, would we be able to maintain that particular momentum? So I'm just referring to that particular part.
So basically I said we will maintain the momentum. It means we maintain the momentum. It's very clear.
No, but like on both
And there
the
is a great opportunity in front of us. Definitely, we will maintain the momentum.
Oh, great. Great. And lastly, sir,
Sorry
you were
to interrupt, Mr.
yeah,
Kamlesh.
just a follow-up to that. So, sir, you have clearly articulated that you are not going to have any external capital. So does it mean that there will not be any fundraising to fund the upcoming
No, we are not going to come to take any capital on the market in let's say, organic growth. What I say is an organic growth. Okay. So let's say today we are growing organically in the next 2 years. So there is no need of extra fund because our all internal accruals and our cash flows and everything you will see improving in this coming quarters very nicely. So we are able to fund it very well our own growth over here there.
Thanks and best of luck.
Thank you.
Thank you. The next question comes from the line of Dipesh Kashyap from Invesco. Please go ahead.
Yeah, hi sir. Thanks for taking my questions.
Hi Dipesh.
Hi, sir. Hi, how are you, sir?
Fine.
Sir, I just wanted to understand how to think about the capacity and capacity utilization. So, as I understand, we have 6,000 machines capacity right now. So that means 1,500 odd machines per quarter, right? But this quarter we did around 1,100 odd machines. And you talked
close
about
to 75%.
Yeah. So my question is, like, you talked about that you have capacity for small, mid, and large machines which are not fungible. So based on your order book, what kind of capacity utilization can we reach? Because we were already at 90 odd% in the last quarter. Has the order book kind of changed? Because I think you have done more auto and general engineering this quarter. So how should we think about going forward in the remaining 9 months?
Yes, Dipesh, nicely. Let's say I'll tell you one thing that what I say is that many of the machines, large machines, my manufacturing time is longer. Okay. So sometimes it's not falling into a quarter on quarter that, okay. Sometimes, let's say, in this month as June has been not finished, some machines and falling into a July there. Okay.
Yeah.
So definitely that kind of things will, and the let's say, some of the large machines manufacturing time is 12 to 15 months. Okay.
Correct.
So coming on to direct in production, so it's not directly measurable quarter on quarter there basically. Okay. So that's the challenge. I'm not able to satisfy you there. But
no, I just want to understand
end of the year.
Yeah. Sorry.
Yeah, end of the year, let's say we see that we will reach 90% utilizations over here. And that's why are on track there completely there.
Okay, understood. And then your capacity, which are going to come in September 26, that is on track right now. That is further delay.
That's absolutely. There is no delayed. We may hope we can do something better, but
there is no delay at the customer end also. They are also on track with their
absolutely. Already we have taken orders and we want to execute it there very fast basically.
Understood, sir. Secondly, I think in the board decision, you have taken a decision to acquire entities in US and China. It is just a sales network, or you are going to set up a manufacturing also there? Like, any thoughts about that?
So right now in a first phase, we are looking to set up a sales and services there. Okay. And then if we require to have some more, let's say the opportunity there and to do some assembly plan over there. The way we have a Huron, okay. All the components have been manufactured, sub-assembly done over in India, and very near to customers in Europe, the way China and the US also. And if the US increase the tariff and the opportunities people are moving there for a manufacturing, we'll do some small assembly and then maintain a good momentum there.
Okay. But for sales network, you need not acquire, right? That is like 1 or 2 people you can put.
No. We are going to increase only sales network right now. There are not acquisitions or not in company. We are not in a large capex or any kind of thing like that.
Understood. And lastly, sir, the total capex that we were supposed to do this year and the next year was how much? If you can just remind us.
So basically, our capex, what we have decided is close to 450. Okay, 450 crores. That's the only right now. It's the things are going on there.
And this will be done by September or 2026. That is what.
September 2026. Last, we will do before that basically, but the last is 2026. Yeah.
Understood, sir. Thank you, sir. Thank you very much. Thanks.
Thank you.
Thank you. The next question comes from the line of Priyesh Babaria from Mahindra Manulife Mutual Fund. Please go ahead.
Sir, thank you so much for the opportunity. Sir, just wanted to ask on, just like you mentioned, the gross margin with respect to, let's say, based on the level of machines, entry, mid, or high. Would you be able to throw some color on as per the end user industries?
See, I'll tell you in terms of a entry-level product and let's say the value what I say is entry-level product is up to 50 lakhs. Okay. So it's not like that as an end users are fit on always in this three categories. Some industries like that. Every industries are having all three kind of products are required there. Okay. Largely, I can say only one thing today, and that is today there. Today, aerospace and defense are in a high-end machines there. Rest, but in aerospace and defense, we have a entry-level product also there as an industries-wise there. Okay, there are some non-complex parts are being machines, and they use the entry-level product there. Okay, so I'm not able to because all the area is not been specific based on the industry spectrum there.
Yeah, understood.
And I'll tell you one thing that we are so diversified. Okay, we have close to now 14,000 plus customer base now. Okay, to explain you to all my investors like you and all people, I have put into this main category and combined them. Okay, but there are many manufacturing areas. Okay, like today the railway is one of the biggest growing area for us. Okay. Like a medical implant is going to be one of the biggest area for us there. Okay, so that's all our sealer under others categories. So there are many of this kind of things are there in subcategories to be there.
Fair, sir. Fair. And we have also second question is on we also hired two people, which is basically senior management personnel. This is with respect to US and China only, or something? How do they see that?
I'll tell you that the way we are growing, so we are making our management bandwidth is we are increasing. Okay, so 2 years back we were at less than 1,000 crore company, and we are growing now every year 30-35%. So let's say strategy and operations are two different areas. So today everything was in one basket over here. So we have made one vertical on a strategy. So one of the gentlemen we have hired, he take care about the entire strategy there. Another person we have hired into operation, that is on a operation head over here. That's on a manufacturing and looking is to here. And many more people we are still taking in a near terms to expand our management bandwidth over here there.
Sure, sir. Thank you. Thank you so much for answering all those questions. Best of luck. Thank you.
Thank you. Ladies and gentlemen, due to interest of time, that was the last question. I now hand the conference over to management for closing comments. Thank you, and over to you, sir.
Thank you very much to all of you for joining us today. I hope we have addressed all your questions. We remain committed to keeping the investment community informed with regular updates on any development in the company. For any further information or inquiries, please feel free to reach to us as well as our SGA, our investor relation advisors to be there. Thank you very much to all of you.
Thank you. On behalf of Equirus Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.